Monday, December 9th. I'm going to fly through this one. So please be aware, there are a couple of things that I really want to go over. The first is that there might be a new thing happening to the paid newsletter subscribers, just based on this juicy-ass video that I found of this guy, sales trainer, Andy Elliott. If you want to Google him, he is just a total effing loser. He's charging $20,000 for bro tapping. Well, in the paid newsletter, if you sign up for the newsletter, if you go over here to my link tree and sign up for the paid newsletter, if you want to pay me $20,000 for bro tapping, I'm perfectly willing to do it. So if you want to pay for $20,000 for that, have at it. If you want to know what bro tapping is, then just listen to this video. That's on I'll put it in the newsletter. It's a video that I'll link in the newsletter. The newsletter's free, but bro tapping is not free. So yeah, what a dick. I mean, just an absolute dick. But the Qs, where are we? We're at 526. The algorithm got you in at 508. The algorithm's performing well. It's doing 72%, back tested over 24 months, 19 positions. If you just bought and held, you've made 79%. So I do suggest in ETFs, we'll go over some top ETFs, momentum ETFs, and some other ones. That again, ETFs for me, I'm looking for entries. I'm not looking necessarily for exits. If you want to take some cash off and buy some single stocks, then sell, on some of the exits. But again, for the way I use the 4-hour algorithm in Trendspider, it's finding entries in here. I don't look at this as, oh my God, I've got to get out, because you are in a long-term bull market. Look at that weekly. Look at that. I mean, don't you wish you got in here in 2017 at 133? Don't you wish you bought the dip in 2022 at 265 and now you've doubled your money? Again, I can't, unless if to be a bear in a market like this over the last 30 years, if we just look at a monthly chart of the Qs, okay? Where's the drag on this? Sure. 2022 was horrible. The Fed was raising rates. But why would you get out of something like this? Again, that's what kind of startles me. It is what it is. One thing I do want to bring up, that Seeking Alpha has extended their Black Friday deal. And again, they said they have a countdown up there, so I guess they're serious this time that it's coming true. You have 2 more days. And the bundle offer is where it's at. The bundle offer, you get premium and alpha picks for just $509 for the year. For the year. That's a savings of $289. You'll see how I go through this. You'll see how I find stocks. You'll see how I value stocks. If you have any questions for me, if you're in the social requests, there's no reason to ask me a social request what I think about a stock. You know why? Because there's this virtual analyst report. Okay, let's go to Palantir, which that one's flying again today. Just pull up this virtual analyst report and go and read about Palantir. It's like having an analyst in your back pocket. It's like asking Gary, just better, 100% better than me, because it actually takes valuation, growth, profitability, momentum, and revisions into respect. And it says, we don't care about any of that. What do we think about the stock? And then you go over to Trendspider and you can look at the chart of Palantir and you can say in Trendspider, and you can say, okay, what do I think about this stock? Well, I think it's effing crazy that it's up this much, but it can't be stopped. And look, you've got the Bollinger Bands just starting to widen open. You've got the 200-day down here at 19, and the stock is trading at 81. So if you ask me what I think about Palantir, then just go ask the virtual analyst report. That would be my thing. And we also, by the way, just so you know, there's 2 portions to the combo. There's the premium, where you can look at the readings of the stocks, and then there's alpha picks. And the big thing about alpha picks, again, you have 2 days to sign up for the bundle or the individual, Seeking Alpha Premium and alpha picks. But alpha picks, it's the portfolio. You get a pick on the 1st, a pick on the 15th. And then they tell you when to sell. So it's a managed portfolio. And if you want, I'll include in the newsletter as well a look. Well, we'll go down here, because what I do is I post this pretty much every day, but I bought $50,000 a couple of months ago. I think it was October. This video right here, I bought the Alpha Picks. I'm up like 15% on that in the portfolio. It's a fantastic portfolio. Again, Seeking Alpha Premium is one. The Alpha Picks is the other. You can sign up for the bundle and save $289. And you got 2 days left to do that. So you might ask, well, what do you want Seeking Alpha Premium for? It's just a bunch of articles, blah, blah, blah. Well, they have this thing called the quant system. And you go over here to the top stocks on the left, okay? And I've gone over, last week I went over KINS. This one's been a crazy runner. We've gone over since, for months now, PSIX, that's up thousands of percent. We've gone over Carnival Cruise Line, which is an alpha pick, which I bought at the beginning of November by mistake and made 15% by mistake. You've got United Airlines. And then we've got a new one in here that I haven't seen before. And then this is Lexin FinTech. And you might say, well, what do I want to know about that? Well, again, you've got a virtual analyst report. It's a strong buy in the quant. What is the quant? It's a factor of... It's like a grading system. Remember when you were in school and they gave you an A through an F? That's what the quant system is for 5 factors. It's valuation, growth, profitability, momentum, and revisions. And it grades stocks the way you would grade a paper in school. And so it's very simple. And what these top stocks do, this lists the top stocks in the quant. Well, LX is a new one. And you might say, well, I don't know. Is it too late for this? It's up 205% in 6 months. It's up 201% in just a year to date. And it's only got a $912 million market cap. So, but all the factor grades are really good. Might have an opportunity. You can look at these. We can go in and look at PSIX, and we could take it back here and look at the quant and go back all the way back to when it was rated a strong buy. See, it went to a hold from 11 to 12, and we can even go back. It was a strong quant here. It was a strong buy here at $4.20. Where's it trading today? $30.90. That's how you use Seeking Alpha. You can use it to find all of this stuff. You can use it to find everything, but it's a great site. So that's the way I use this one. Now, let's talk about some other stuff in Seeking Alpha. We had a S&P Rebalance. And if you don't know what this is this is when they take the 500 largest companies and they say, okay, we're going to include these, and we're going to exclude these. So Apollo and Workday replace Corvo and Amentum Holdings. So again, they rebalance all of the S&P stuff, the small cap, mid cap, and large cap. They do all of that. This is an article that outlines that. It's great. One thing that I wanted to point out for 2025 are some of the ETFs that I think might outperform. And so one of the categories of ETFs that I think is going to outperform is growth. And I'm going to include this article. It's from October, the end of October, but it lists some of the largest growth and some of the best performing growth ETFs year to date. There's SPMO. Okay, that one is up 38% year to date. These are ETFs. There's GARP, which is up 30%. You can take these and go into Seeking Alpha, SPMO. Okay, this is the Invesco S&P Momentum ETF. And you can take a look at the charting. And you can go over here and you can say, okay, I want to look at it against the S&P. Well, the blue line here is the S&P. It's up 33% over 1 year. SPMO is up 61%. Then you can go over here and look at the holdings. Oh, come on. SPMO. It doesn't like my computer for some reason today. Let's look at the holdings of SPMO. It's Amazon, NVDA, Meta, Berkshire, Eli Lilly, Broadcom, JP Morgan. There are 101 stocks in here. The largest one right now is Amazon. So you can take a look at that. Again, this article is meant to be able for you to take it and go over there. And what does Seeking Alpha also do? You can look at the expenses of this one. I don't know why this is doing this. Let's pull up Seeking Alpha again. It's crashing on me for some reason. SPMO. I've never had this one. Let's look at the expenses of SPMO. because I'm going to move that over there. Expense ratio of 0.13. It's not bad. Not bad for a managed ETF like that. Again, momentum ETFs, I like momentum ETFs because I think we're in a momentum market and I think they're going to outperform VOO. Another ETF, these are growth. These are growth ETFs. Sorry, I got completely confused because the top one is a momentum ETF. But another, the growth ETFs are great. Momentum ETFs right here. There's another list of 34 ETFs with momentum. So both of these articles list great ETFs. Find one that fits your risk profile. It's as simple as that. Your risk profile is yours. You can ask me, what do you think of this one? I'm not you. That's like saying, hey, when you go to the Baskin Robbins and they got 32 flavors, what's your favorite? Mine might be different than yours. Your risk tolerance is going to be different than mine. Your ability to do this is going to be different than mine. So again, that's why I'm providing these types of articles. And that's why I say go and get Seeking Alpha, because you should be doing your own research. The number one rule on this podcast is don't listen to a douche on the internet. And yes, if you're watching this, I am that douche. So you shouldn't listen to me. More than likely, I may be wrong about things. I've been right, but I could be wrong. So don't look to justify your behavior by asking somebody, what do you think of this? Because again, you can do your own research. Trending stocks amid last week. This was a great article because it brings up some of the big movers like Marvel, SentinelOne, Coupang, and some of the South Korean stocks. Airline stocks really moved. Intel, Supermicro, United Healthcare tumbled. I don't know anybody who's... that just whole situation is just effing crazy. AT&T, Microchip, Palantir brings up all of that with some of the stuff. So I like this article. Let's see. Oh, we do get a new alpha pick, by the way, on next week, Monday. And CPI comes out this Wednesday. You may know that we had an election. And so you may want to say, hey, how does the S&P do after the year after an election? Trendspider went back and did that for the last 50 years, okay? And they did it based on month. It's not bad. It's not bad at all. Maybe you want to sell everything in January because February is down 1%. I don't think so. Time in the market beats timing the market. But this may give you a nice little roadmap. You can do this yourself in Trendspider. That's the whole point, is that you can do all of this in Trendspider. You can do all of this in Seeking Alpha. So again, that's a good little thing. Now, Shai Bular, he's one that I respect on Twitter. You should be following him. He does a great job of just laying out the thesis. 5 stocks he says to buy now. Snowflake. I don't think you buy Snowflake. I think you're looking to sell Snowflake, but he has been more right than me in some of these names. I trade Snowflake based on this little pattern right here, where it gets down here to 130. That's where you're buying. When it gets up here to 200, I think you're selling. And I think at 185, I think you're hitting that. I think you're hitting your 200 day. So I think it's going to run up to some resistance, but it does have more room to run. Now, he says Unity Software, leader in real-time 3D content. Transmedics, revolutionizing transplant medicine. ASML, backbone of semiconductors. Amazon. Amazon's one that I would add to any time it dips back. He has 5 growth stocks to avoid. Hims, Kava, DraftKings, Mobility, and SMCI. And in fact, some people asked me about SMCI this weekend. But I'm going to put this in the newsletter. Okay, this is where Shai just lays it out. Okay, he basically puts it really well. There are certain stocks in this market that are worth the risk. There are others, to me, that aren't. There are people who will take that risk. Right now, you're benefiting from that risk. If you bought when I sold SMCI, you are up like 30 or 40%. Kudos to you. The risk profile, this is why I tell you it's different for everybody. The risk profile for me of Supermicro, having their auditors quit, having a new auditor come on, and then saying, hey, our committee found no problems, and finding out that committee is one person, yeah, and having them be delisted before for the same exact issue, Not sure I want to stay in that one. And Shai puts it really, really well right here. So I think you can read that one and just come away with your own thought process. Now, Palantir, this guy puts it really well. Palantir, Trade Whisper, Palantir valuation makes no sense. But why does everybody still buy it? And that's exactly what he lays out. And in fact, Palantir got a new expanded pack with U.S. Special Operations Command. It is up another 6%, up 7% right now. Now, the algorithm got you in here at $50, okay? It's at $81 right now. The algorithm got you out at 22%. If you just bought and held this one, you've done really, really well. And you can see where this stock has continued up and the MACD has gone down. The RSI went down. It reset and it came right back up. When you look at a longer term chart of this one, I said 25 is resistance until it turns into support. It never even labeled its support. So I don't think that this one's going to come crashing down, but am I buying it here? The answer is no. I don't feel comfortable buying it here. I'd rather own this one like I'd own Tesla in an ETF. Find an ETF that owns Palantir. And that would be where I would feel comfortable. That doesn't mean that you don't buy this. That doesn't mean that you go out and you say, you know what, I'm not going to do it. I'm the guy that sold this at 25. So when I tell you that it's too crazy to buy it, I also told you Tesla was too crazy to buy at 260 because that was resistance. It killed it after 260. Look at that 251. It didn't even think twice. And it continued higher. And we're trading at $400 in pre-market. Okay? That's what I talk about when I say don't listen to a douche on the internet. You've got to find your own positions. And so I try and help you. Alpha picks, if you don't want to find your own positions, the one that you should absolutely get is alpha picks. Why? Look at the performance, 193% versus 61% on the S&P. It is a no-brainer portfolio. And I tried to pick these stocks. When they would release it, and I was an affiliate with them, I would say, you know what? Sprouts Farmers Market, I shop there. I like that it's organic food. I'm not gung-ho on this thing. And I skipped it. And I missed out on a nice 200% run. Other picks that they picked, I was like, it's not in my wheelhouse. I'm a large cap tech investor. I missed out. So what did I do? I bought the entire portfolio with the process that they suggested. It is killing it. These are stocks that I would never invest in myself, but they have been it's a data-driven portfolio that is rules-based. So if you don't want to do your own research, at the very least, this is what you should get. And you can save with the Black Friday offer. Again, the normal savings is $50. It's 3 times the savings right now. You just go to Linktree right here. Okay, for anything that I promote on here, it's Linktree. The top one is Trendspider. You get the best offer available. The second one is the bundle Black Friday sale. But at the very least, I would say get Alpha Picks, which is the fourth one. Seeking Alpha Premium is another option for you if you want. This is where you get the quant stuff and everything like that. But again, the bundle offer in my mind is the best. And if you want Palantir, this is the article to read because he starts it out perfectly. The valuation makes no sense. And it doesn't. But again, they continue to sign stuff. Now, one that the valuation does make sense, it's NVDA. NVIDIA slips as China opens probe on anti-monopoly concerns. I have said this before. NVIDIA, you just buy it under 140. Do I know for sure that that is a great long-term play? No, because this company's market cap is what should restrict it. You can't have a chip company that is the largest company in the world that's beating Apple, that's beating Microsoft, that's beating Tesla. Many people are saying that Tesla could be the largest company in the world, which would push that stock over 1,000. Okay, I think Kathy Woods is calling like for $4,000 on Tesla. She was right before. She may be right again. But again, NVIDIA, you got an entry in the algorithm at 142. In pre-market, you're trading at 139. If you look at this weekly chart, the MACD has reset. The RSI is down at 61. You haven't had an opportunity like this since the stock was trading at 20. It's now at 142. So in my mind, I think it's setting up for a move higher because Blackwell is sold out. The only thing that's going to stop this thing are political pressures. And that's it, because they are leading AI such a lead. Now, if somebody comes out, like we know Amazon's doing their own chips. We know that Google's doing their own chip. We know that Apple's doing their own chips. We know that Meta's working on their own chips. But they ain't catching up. Right now, what they're catching up on is just compute power. But they're not doing the 3D modeling. They're not doing the video stuff that Blackwell has. They're still 2 to 3 years behind. And again, that's just a douche like me reading on the internet and understanding this stuff. So I do think that NVIDIA has a place in your portfolio. Something else that we talk about is GLP-1. Lilly tops Morgan Stanley's biopharma list for 2025. Now, does the valuation on this one make sense? It might. Year to date, you're up 41% in a stock that is this big. The valuation does not make sense. But when you factor in growth and you put the PEG ratio here, it does make sense. So we heard on their last earnings report that they could meet demand. We heard that demand is off the charts, but they could meet it. They can't meet demand. And so that's when you got compounders like Hims and stuff coming in. But they are constant. Them and Eli Lilly and Novo Nordisk are constantly fighting this. This is why it's in the core portfolio. And yes, you could have bought this under 800. At 827, I think you're fine. Do I own it? No. But there's a reason it's in the core portfolio is because you can't stop GLP-1. People don't want to exercise. They want to take a pill. These are diabetic drugs that have been proven to actually help people lose weight. And yes, there are people out there who medically can't exercise, who need to lose weight, who are diabetic and need these prescriptions. But the fact is, Eli Lilly is basically going to the FDA and saying, you know what? This person with an ingrown toenail, they need a GLP-1. That person who just broke their finger, they need a GLP-1 because it's going to help them recover faster. That's what GLP-1s are. And that's why these drug companies are trying to develop them so fast. So, and I know Eli, from the paid members, you emailed me. I just haven't had time to read it, to be honest with you. Again, I'm kind of taking care of my dad. So there are some issues there. But Eli Lilly, again, Wells Fargo, their core list includes Google, Disney, Home Depot, and Walmart, and more. This entire article outlines it from sectors. Okay, this is like the core portfolio. This is like the core portfolio from Wells Fargo. So if you have that type of, hey, I need to set myself up for 2025, remember, ETFs are great. But if you want to do it in single stocks, make sure you're choosing stocks that aren't going to keep you up at night. And so that's nice and easy. Now, what do we have this week for catalysts? Well, you've got, again, I mentioned it. We've got CPI, all the inflation data coming out on Wednesday. But you also have huge earnings. You have huge earnings. And if we just go down this list, you can see we've got, let's see, notable analyst calls. Oh, these are the analyst calls. Tesla, Kroger, FedEx among top picks. The next article. So you can, the analyst calls from last week, they included Tesla, Kroger, FedEx, blah, blah, blah. Again, I'm not reading very well. But earnings this week, everything's in the newsletter. Again, if you want to read the newsletter, you can. Earnings this week, Oracle, GameStop, Adobe. I don't think Roaring Kitty, by the way, has the power that he had because we didn't see a 60% pop on GameStop last week when he posted cryptic stuff. You did see like a 10% pop. But again, if you're kind of, he's an upper left to bottom right kind of chart. Oracle reports today. It's not in the core portfolio. It probably should be. OG listeners of the podcast will know I was watching this at 60 and it's now at 192 and you just got an entry in the algorithm. See it right there at 192. You trading in pre-market at 195. I think it's set to go over $200. I think it is. If we go and look at Oracle here in the in Seeking Alpha and we look at it, it's a hold in the quant. Why? Well, it's the valuation and the growth. The growth is not that great. It's okay. It's got a D. The valuation, it's a bit expensive. Even their PEG ratio is a bit expensive. But if we go and we look at the quant and we see it's been a hold forever. It's been a hold forever. The quant doesn't necessarily reflect stock price. It was a strong buy here at 122. Remember, you're trading at 200 now. It's been a hold since it was going up. So maybe the quant's not the best factor of price on this one, because we go back to I've been saying this for the last like 3 weeks in the newsletter. Price is all that matters. Quant stuff doesn't matter. The Wall Street price target doesn't matter, because the Wall Street price target is 186. I have a feeling these guys are going to do really well on their earnings. Any pullback on this one, I would look to be buying, because I do think that this is a really, really good stock. So again, Oracle is one. We can look at going down here. On Tuesday, we've got GameStop. On Wednesday, you've got Adobe. On Thursday, you've got Costco. Costco is a core, the core portfolio. I don't understand this stock. It's almost at $1,000, $995. I don't get it. The valuation makes no sense whatsoever. Again, this is one that I've traded around $800. I was waiting for a pullback. I never got the pullback. I made some money on this one. It was in my retirement portfolio. I didn't feel comfortable holding this one at that price. And I think this one's going to crap out on me again. No, there we go. If we go over here to, come on. I'm going to reload this one. It's not letting me click around for some reason. Summary, it's a hold in the quant. And the reason it's a hold is just the valuation and the growth. And you can see the value. If you're paying 55 times forward earnings for this one. If you go to the growth on this one, it's great. It's not like perfect, but they're growing 5% revenue year over year, where the sector's growing at 1%. Again, it's really good. If you go to Wall Street and you say, well, what's the price target? 972. So am I buying this at 995? I just don't feel comfortable. But again, if you're a Costco shopper, if you go there every week and you spend $1,000 a week there, have at it. That makes sense. It would make sense to buy it. So again, this week's earnings, they're really, really, we saw it last week. It pushed everything last week was based on earnings. So again, I think that you can look at this stuff and find opportunities. Now, from Spotify, social request, new listener, just wondering what your thoughts on ET and GEV are. GE is GE Vernova. It's power. This is one of the stocks that split out from GE. I mean, what don't you like about this stock chart? The algorithm got you in at 175. So it's now trading at 346. I mean, this is just the 4-hour algorithm. This isn't a weekly chart. This is the 4-hour algorithm on this one. You've had this is kind of like an NVDA stock, where it trades sideways right there and then just takes off. So I like GE Vernova. Is it expensive? Yup. But it's energy. What's powering the AI revolution? It's energy. Now, it's not covered in the quant, so you can't look at, but you can look at all of the earnings, valuation, everything. Valuation, they're not making money. The growth, I mean, it's not there. So it's not covered in the quant. But profitability, they're making 17%. Okay, 17% growth profit. The sector's making 31%. If you want to find out other ones in this sector, you can. People also follow GE Healthcare, CEG. I think there's a Vistra, which is the VST. This is the biggest power one. I think it's the S&P leader for year-to-date gains. So I think that one, Energy Transfer is just Energy Transfer. I mean, that one, if you go over here to FinViz and you look at Energy Transfer, this is the one where you go down here to the insider buys, and they're buying a ton. Look at this guy, Warren Kelsey, bought $47 million worth of stock. Okay, he just bought that in August at $15.68. Where are you trading right now? $19. It's had a pullback. Was up here at $19.80, almost $20, and then just pulled back. I like it. It's got a yield of, let's see, their dividend estimate, a yield of 6%. Personally, I like MPLX better. But, again, if you pick either one, I don't think you're going to go wrong with either one. It's energy. Both of them are energy. From Spotify. Thoughts on KKR from Kaio. Bought 15. KKR. I don't even know what KKR is. This is KKR and Company. I mean, the algorithm makes you 68%. Buying and holding makes you 202%. If you look at it, it's bottom left, upper right. Good stock. KKR. Let's see what it is. It is a KKR is private equity and real estate investment firm. Blah blah blah. Direct and fund investment is specialized in acquisition, leverage buyouts, management buyouts. So it's like a financial, asset management, custody bank. I mean, it's okay. It's got valuation. It's expensive. I mean, you're probably paying for a leader type situation. I mean, you're paying 33 times forward earnings. The sector median is 13. So if you want to take a look at some others, then you look at this one. CCIX is this is a much smaller market cap, 3.12 billion. But the quant has it as a buy. Valuation is a bit stretched, but the revisions a little bit better than KKR. But again, what you think versus, is it, do you think it's a good long-term buy and hold? I don't know. I mean, the only thing that's going to determine if it's a long-term buy and hold is the stock price. And if you think KKR, again, I'm a large tech investor. So to ask me, this is like going to McDonald's and going, hey, what do you think of ketchup on the Whopper? It just doesn't fit my profile, but it doesn't mean it doesn't fit yours. Do I think it's okay? They've been, Kyo says, been making lots of big acquisitions in Tokyo. Big fan of the show. I love hearing a call out of complainers. Yeah, F the complainers. But KKR, I mean, it's okay. It doesn't look like there's anything glaring about it that I would say, oh my God, you've got to get out of this one. But for you, you are not me, and I am not you. So to ask me if this, do I have it in my portfolio? No. So if you want a model after Gary, the answer is no. Don't buy it for long-term buy and hold. But I'm also the guy who got out of Palantir at 25. So the reality of this situation is, does it make sense for you? I don't think it's a bad one. But for me, when you look at Wall Street, on this one, it's a 3% upside. Why would you buy something where Wall Street, there's 20 analysts that think that it's worth $162. So if you bought a bunch at 126, you're doing well. But for me, I'd probably, these guys aren't inventing the AirPods. They're not saying, hey, the Apple Vision Pro, it's a great buy. They're not saying that kind of stuff for KKR. That's why I hold 60% of my portfolio in Apple. Is because they develop new products. They buy back billions of dollars of shares, and they boost the stock price. So, and Apple's at an all-time high. So, again, I would put this with a little caveat. Do I think it's a good buy? I think it's okay. If you got it at 126, it's a great buy because you're up at 158. So, let's talk about some scans, some stocks in the 4-hour algorithm that show bullishness. IBIT. If you're not in Bitcoin, I don't know what to tell you. I think we're in a cycle where Bitcoin is going to continue to move up. Trump was just talking about it this weekend. He reported David Sachs has appointed him as the czar of crypto. So I think the incoming administration probably likes crypto. It boosted Bitcoin over $100,000, and now you're back under $100,000. Just buy it. Just buy it. I mean, again, 1% of your portfolio, put it into IBIT. Put it into MicroStrategy. I sold MicroStrategy at 380. It's at 390, 391 right now, but it's trading sideways. Look at those Bollinger Bands. Where would my guess be that this stock is going to go as it resets? Up. The dude ain't selling. And yes, it's leveraged against Bitcoin. So where do I think it's going to go? I think it's going to go up. But the weekly just hasn't reset. Now, all of those little purple things you see are just buys in the algorithm. And you can see it got an initial entry right here at 120 and then bought at 150, bought at 200, bought at 235, bought at 271. I tried to time the algorithm. I got it wrong. I sold at 380. It was the Wednesday before Thanksgiving, and I sold that. Another one that has a cross up here in the algorithm that I currently own is CrowdStrike. Okay, it's a secondary one. It gets you in here at 319. Don't you wish you were at 319? And then it pushes you up, and it's probably going to move higher. It just reset itself, and it's telling you, hey, there's probably a move higher here. You had the golden cross right there of the 50-day up on the 200-day. So all of these scans will be included. There's an entire list of Bitcoin and crypto stocks that you could trade at your heart's desire that are bullish in the 4-hour algorithm. If you're new to Trendspider, if you took advantage of that Black Friday sale on Trendspider, then go and look at the newsletter and go down to the bottom and just look at the scans, because you can use my 4-hour algorithm and say, oh my God, it just got you in again. And you can make the determination. We looked at Tesla on Friday, Netflix on Friday, CLS on Friday, Twilio, Royal Caribbean, DraftKings, TLN, which is a nuclear play, Workday, GEV. Just asked me about GEV. It just got Friday it was on the scan list. Leveraged ETFs. There will be a list of Bitcoin and crypto as well. So just go over and sign up for the newsletter. Like the song says, sign up for the newsletter. Let us help you grow. I don't know who us is because it's just me. I'm the only douche that's here. So if you have any questions, you can hit me up. Linktree is where everything is. You can see it right below my head. How do I get to what's your website, Gary? I get that all the time. linktr.ee/dailystock. Look at my head. It's right below on the screen the entire time. The only place that doesn't have a video is Apple Podcasts. Spotify, it's a video podcast. YouTube, it's a video podcast. So everything has a video. Whether you're listening or not, you can listen on Spotify without looking. But if you say, you know what, Gary, I don't know what your email address is. It's on the freaking Linktree. Everything right up top here is on the Linktree. Okay? So if you have any questions, hit me up. Talk to you later. See you tomorrow.
Every
Bye.
morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.